Hello everyone and welcome back to Unlock Your Finance. Today we are diving into a topic that touches every aspect of our lives, personal finance. Whether you are just starting your career or looking to make the most out of your hard-earned salary, this video is tailored to help you navigate the intricate world of financial management. The video will be thoughtfully organized into 4 distinct segments, each dedicated to key financial pillars: health insurance, term insurance, emergency fund, and savings, along with considerations related to needs and wants. If topics like these interests you and you want to learn more about investing, tax saving, and everything related to managing finances, do subscribe to the channel and hit the bell icon. Let's jump right in. We will provide information in terms of percentages and illustrate with an example based on an annual income of 10 lakhs for simplicity, offering a clearer perspective. Firstly, above everything else, getting health insurance is crucial. In case something bad happens, like an unexpected illness or injury, it could end up costing a lot in hospital bills. That's where health insurance comes in. It's like a safety net for your hard-earned money. It's a good idea to have at least 5 lakhs of coverage for each person in your family. If it's for both you and your spouse, aim for at least 10 lakhs. Keep in mind, the older you are, the more you might have to pay for the insurance. On an average, a decent health insurance plan could cost you around 10,000 per year for 5 lakhs of coverage. However, the exact cost depends on things like your age, health conditions, the plan you choose, and how much coverage you want. If your parents are dependent on you, you should definitely consider taking a health insurance for them as well. You can also take tax benefits for the premium you pay under Section 80D if you opt for the old tax regime. If you want to plan tax efficiently, consider watching the video coming in info above. We will also provide the video link in description. Next up is life insurance. If you have dependents, it is very important for you to have a life insurance. Opting for term insurance is a fair choice when considering life coverage. By choosing term insurance, you can secure substantial coverage at an exceptionally affordable rate. This provides a robust financial safety for dependents, ensuring that in the unfortunate event of policyholders' demise, there is ample support to settle any outstanding loans and sustain day-to-day activities. Ideally, you should have a term insurance of 10 times your annual salary. As for our assumption of a salary of 10 lakhs, you should at least have a term plan of 1 crore. We will also suggest to take the critical illness rider at a very nominal cost, which will be there in almost all the term plans. This will cover you against terminal illnesses like cancer or organ failure. A term plan of 1 crore can cost you anything between 12 to 15,000 yearly. Again, it can be higher or lower depending on your age and health conditions. Next up is building an emergency fund. Many people make a big mistake by jumping into investments without having an emergency fund. Life can be full of surprises. We all know how unstable jobs has become, which is our primary source of income. Suddenly needing a large amount of money can quickly wipe out our savings. Think of emergency fund as a financial safety net. It protects you from unexpected expenses and keeps your overall financial health secure. So before you start investing, make sure you have this cushion in place to handle life's unpredictable twists and turns. We recommend setting aside an emergency fund that covers your essential expenses for 6 months. Essential expenses are the things you need to live, like rent, groceries, utilities, and so on. This fund is not meant for extras like entertainment, it's strictly for the must-haves. If you have a health insurance, a term insurance, and an adequate emergency fund, you are already in a very stable situation financially and start planning for investment to attain financial freedom. We will request you not to miss any of the 3 points we discussed till here before getting to investment planning. If you're liking this video, please leave a like and subscribe to the channel for more such content. Let's continue. Next up is savings, needs and wants. Considering premium of 50,000 for your health and term insurances, which is just 5% of 10 lakhs, which we have assumed here as the annual salary, we are left with 9.5 lakhs for our needs, wants and savings. From this, we will allocate 50% to our needs, 20% to wants and 30% to savings, which brings us to the conclusion of spending not more than 4.75 lakhs on essential if our salary is 10 lakhs. We can spend 1.9 lakhs on our wants like vacation, entertainment and everything else that interests us. Rest 2.85 lakhs goes to savings. Some portion of this should be kept in fixed assets and some in equity, depending upon your age, risk appetite and financial needs. We will come up with a video soon on where and how you should be allocating your savings for building wealth efficiently. Everyone's financial need is different and needs to be addressed differently. But if you want to go by thumb rule, you shouldn't be having more than 100 minus X in equity, where X is your age. Hence, if your age is 25, you can have 75% of your savings in equity. Let's summarize on what we discussed and conclude the video. In this comprehensive guide to personal finance, we have covered crucial aspects that impact your financial well-being. Starting with health insurance, we emphasize the importance of having a robust coverage plan, suggesting a minimum of 5 lakhs per person within your family. Moving on to term insurance, we highlighted the significance of opting for a term plan, ideally 10 times your annual salary, to secure your dependents' financial future. Additionally, we recommended considering a critical illness rider for added protection. The discussion then shifted to the necessity of building an emergency fund, acting as a financial safety net for unforeseen expenses. This fund, equivalent to 6 months of essential expenses, ensures stability during unexpected life events. In our assumption, this should be nearly 2.5 lakhs for a salary of 10 lakhs. Lastly, we delved into the allocation of your remaining income, emphasizing the importance of balancing needs, wants and savings, with a suggested division of 50% for needs, 20% for wants and 30% for savings. We provided a practical guideline to manage your finances effectively. It's crucial to allocate savings wisely, considering a mix of fixed assets and equity based on your age, risk appetite and financial goals. Remember, these principles are designed to create a strong foundation for your financial journey. Tailor them to your unique circumstances and consult with financial experts for personalized advice. By addressing health and life protection, building emergency funds, and adopting a strategic approach to spending and saving, you are well on your way to achieve financial stability and ultimately financial freedom. If you found this information helpful, consider subscribing for more insights on managing your finances effectively. Thanks for joining us on Unlock Your Finance. Bye-bye.